Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBP USD Pound US Dollar. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my channel for the analysis of other pairs. So let's get started. So this is the 4 hour chart of GBP USD in front of us right now, and as we all know, there is a sharp rise in the price of GBP USD after the Fed's meeting yesterday. The two main factors of the Fed's meeting was the inflation. Feds have clearly told that there will be an inflation in the short term, and the second point that mainly focus was the COVID-19. Vets have also clearly told that coronavirus will be a part of us for some time because there are new variants coming out each and every day. So coronavirus will be there among us. So these two factors had a direct impact on the price of US dollar, and as a result we saw the dollar going down. Previously the chart of US dollar was like this. It was in a bullish uptrend taking support at the trend line. And after the Fed's meeting yesterday, when they told that inflation will be there, and as we all know, inflation devalues the currency, and right now you can clearly see that market is going down. So overall we can see that the structure of the US dollar DXY chart has changed, and this trend line, which was acting as support, is no longer valid. And right now we can see that there is a bearish tendency going on in the US dollar. So we can hope that this particular level 92.08 may provide support to the market. Right now trading at 92.15, and we have a support at 92.08. So we can hope that this level may provide support to the US dollar, and in case it goes up also, then there is a possibility that again US dollar will be facing resistance at this trend line. And as we all know, US dollar has a direct impact on the market, and if US dollar starts going up, the currencies like pound, euro will be going down, and right now it is going down. Therefore GBP USD is in a rise here. Okay, so keep your eyes on the chart of DXY as well. And if we go to the Forex sentiment meter here, you'll find the Forex sentiment meter on my website avilashhazarika.com. If we go to the Forex sentiment meter, we can see that 85% retail traders are still short in the GBP USD, and only 14% traders have taken long position. And as we all know, 90% retail traders lose money. You have seen on the chart. You have seen on the chart that GBP USD is going sharply. Okay, there is a huge bullishness in the market, and they have taken 85% retail traders have taken short position, and this is the main reason retail traders lose money in the market, because they always stand against the trend of the market. Okay, so let's jump to the chart of pound US dollar and see what should be our strategy. Okay, so you can see that I have a price level marked here, and in my previous videos also I have clearly mentioned that this level is extremely important for the GBP USD chart, because this level belongs to the weekly chart. If we go to the weekly chart here, let me remove the drawings. Okay, you can clearly see that previous week there was a sharp fall in the market, but market somehow recovered and managed to close at the support again, and this support level is providing support to the market for a long time. For almost 3-4 months this level is acting as a strong support, crucial support for the chart of GBP USD. And just look at the beautiful green candle market has formed this week. Therefore, this level is extremely important and there is no doubt about it. Okay, so please mark the line on your trading platform. But right now you can see that the current market price is far away from this price. Therefore, what should be a strategy then? So if we consider the present trend of the market, or if we just look at this particular trend of the market, then there is no doubt that this market is extremely bullish. And considering the trend of the market, considering the thumb rule of the market, which says that follow the trend, we should only look for buying opportunities in this market. We should mainly look for buying opportunities, because if you short the market, or if you're thinking that, okay, if you're thinking the market has reached the top and you can short the market, then there is a possibility that, my dear friend, you may get trapped and you may lose money. Because the concept is simple. Market is in uptrend, which means that buyers are dominating the market. Number of buyers are much higher in comparison to number of sellers. Let's assume there are 100 traders in the market right now, and out of 100 traders, 75 are buyers and 25 are sellers. So it is always wise to take the side of the buyers, because their number is much higher. And if you're thinking that you should take the side of sellers, whose number is only 25 out of 100, then, my dear friend, you are taking a big risk. Therefore, considering this trend of the market, you should only look for buying opportunities. So first and foremost, okay, in case market comes down, okay, because if dollar starts going up again, then market GBPUSD will come down. So this level still remains the best trading opportunity in your chart, 1.3750. Today, tomorrow, next week, does not matter. Okay, this level is the best trading opportunity for you. Okay, and the second best trading opportunity is, let me drag this line here. You can see that this is the resistance for the market, or this was the resistance for the market, and right now you can see that market is just standing at the resistance. Okay, no market is trying to go up, market is bullish, but still we cannot be sure that market will be going up. So anyways, looking at the present setup of the market, your duty is to wait for the market to come down to the oversold zone, because you can see that market is heavily overbought right now. And if you can see here, there is also a divergence here. Whenever we get a divergence like this, there is a possibility that market may come down. Okay, and mostly market is also in the overbought zone. So therefore, wait for the market to come down, wait for the market to cool off, because see, if you go for a buy here, then your stop loss will be here, and your risk to reward ratio does not match. If you short the market here, then you are going against the trend, because yes, there is a resistance here, but still look at the condition of the market now. Try to understand the market psychology. Do you think that you'll be taking a wise decision? No, 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 my dear friend, that will be a huge risk. So wait for the stochastic RSI to come down to the oversold zone. Let the market cool off. Market is overheat right now. Okay, there is a extremely heated market going on. So let the market cool off. Let the market come down. When stochastic RSI will be in the oversold zone, then just look at the position of the price. If you find market still trading above this level, above this resistance level, okay, then you will understand that this resistance has become support. This resistance has become support, and you can go for a buy above this line. On the other hand, if you find market coming down, here in between these two lines, then also you can go for a buy level. Keep in mind that if you buy here or here, then this will be your take profit target, 1.3928. This will be your, or this resistance will be your take profit target. So the bottom line is, wait for the market to come down, wait for the market to cool off, then only you get the best opportunity. As I always say, do not chase the market, let the price come to you. That's it. So this is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow.